So you've seen the headlines, right? You've heard these wild stories of people making fortunes and losing them, seemingly overnight. But what in the world is cryptocurrency? Well, in the next few minutes, we're going to pull back the curtain and give you a super straightforward guide to finally understanding this whole digital revolution.
I bet you've seen these names flying around. Bitcoin, of course. Ethereum. Maybe even the one that started out as a complete joke. Dogecoin. They're all over the news. But what are they, really? Let's figure that out.
And hey, if you're feeling a little bit lost in all this, you are definitely not alone. It's a common feeling, for sure. So let's just cut through all the noise and break it down into simple, easy-to-understand pieces.
All right, to really get it, we've got to go back to the very basics. Let's forget about all the hype and the crazy price charts for just a minute and ask the most important question. At its core, what even is this stuff?
You know, the clue is right there in the name. Crypto comes from cryptography, which is just a fancy way of saying keeping information secret and super secure. And currency, well, that's just money. So put it together. It's secure digital money. And despite all those pictures of shiny gold coins you see, it is purely online. It has zero physical form.
Okay, this is where things get really different from the digital money you're used to, like in your banking app. See, when you send money normally, there's a central authority, like a bank, right in the middle of everything, controlling it. Cryptocurrency was designed to get rid of that middleman completely, letting people exchange value directly with each other.
And this whole idea really kicked off with Bitcoin. Way back in 2009, this mysterious person, or maybe even a group of people, called Satoshi Nakamoto launched it. The whole philosophy behind it was simple but honestly pretty radical. Create a type of money that no single government or bank could ever control. A truly global, decentralized currency.
So, if there's no bank, how does any of this actually work? I mean, who keeps track of all the transactions and stops people from cheating? Let's pop the hood and see what makes this whole thing run.
The secret sauce behind it all is a technology called the blockchain. And honestly, the best way to picture it is like a shared digital notebook. Everyone who's part of the network has a copy, and every single transaction is recorded in it for the whole world to see. It's all out in the open.
So how does a transaction even get into that notebook? Well, first you decide to send some crypto. That request gets broadcast out to this huge global network of computers. Then those computers all race to solve a really complex math puzzle to prove your transaction is legit. Once a computer solves it, your transaction gets locked into what's called a block, which is then permanently added to the chain. It's basically set in stone forever.
Now, this whole process of solving these super hard puzzles has a name. It's called mining. And the people running these powerful computers, they're called miners. So why on earth would they do it? Well, for every puzzle they solve, the network rewards them with brand new coins. This is actually how new cryptocurrency is created, and it's what keeps the entire system running securely.
Okay, so it was designed to be money, but let's be honest, that is not usually what you hear about, right? You hear about people getting incredibly rich or losing absolutely everything. So which one is it?
And here's the big catch. While the original goal was for it to be a currency, for buying stuff, its wild price swings have basically turned it into a high-stakes investment for most people. The value can change so dramatically, so quickly, that trying to buy a coffee with it is totally unpredictable. This insane price instability, that's what we call volatility. And this number right here just perfectly illustrates the high-reward part of that deal. Just imagine buying Bitcoin back in 2016 for around $500. If you just held on until 2024 when it shot past $60,000, that's a mind-boggling 13,000% return. That's the kind of number that gets everyone's attention.
But, and this is a huge but, what goes up can come crashing down, and fast. This is the other side of the coin. If you bought in around May of 2022, you would have watched your investment plummet by 65% in just a matter of months. This is the high-risk part, and believe me, it is very, very real.
This simple chart just paints the picture of that wild ride visually. From a low of $16,000 at the end of 2022 to soaring over $70,000 in 2024. This isn't some gentle wave. It's more like a roller coaster in the middle of a hurricane.
So what is driving these absolutely insane swings? Well, a ton of it just comes down to speculation and pure hype. Unlike a stock, which is tied to how well a company is doing, crypto prices are often driven by news, social media trends, and just general public feeling. A government announcement or even a tweet from a celebrity can send prices flying or crashing.
Whew! Okay, we've covered the what and the how, so now let's bring it all home
What are the absolute key things you need to walk away with?
First off, a super crucial piece about security, the crypto wallet. Now, this is a huge point of confusion. A crypto wallet doesn't actually hold your coins like your regular wallet holds cash. Your coins always live on the blockchain. The wallet just holds the secret keys that prove you own those coins and let you actually use them.
And there are two types of keys you need to know about. Think of the public key like your bank account number. It's totally fine to share it with people so they can send you crypto. But the private key, think of that like your password or the PIN to your bank card. It gives you full access. You must never share it with anyone, because if you lose it, you lose your crypto. Period.
And if that sounds kind of abstract, let me tell you this totally true story. A guy's hard drive holding the private key to 8,000 bitcoins, worth hundreds of millions of dollars now, was accidentally thrown away. He is still trying to get permission to dig up a massive landfill to find it. That's how vital that private key is.
So when you boil it all down, here's a quick snapshot of the pros and cons. On one side, yeah, you have this revolutionary decentralized system that's open to anyone and has the potential for incredible returns. But on the other side, you have that extreme volatility, a ton of uncertainty about regulations, and a pretty long history of scams and illicit use. It's a technology of really powerful contrasts.
Which brings us to the big final question. After everything we've looked at, this powerful idea, the complicated tech, the massive risks and rewards, what do you think? Is this the blueprint for a whole new financial future? Or is it basically just a digital gamble? The truth is, that story is still being written.